welcome. You're watching The Big Question. I'm Tamanna Inamdar. The global tariff wars have begun and the world is reeling. From a meltdown in cryptocurrencies to equities and crude, everything is in turmoil. Here is what has happened in the last 48 hours. On the 1st of February, President Trump slapped 25% tariffs on imports from two of the United States' biggest trading partners, Mexico and Canada. Energy resources from Canada will have a lower tariff at 10%. 10% additional levies have also been slapped on China. All these countries have come under Trump's tariff wrath for what the US president has called a failure to curb illegal immigration and smuggling of drug fentanyl into the United States. At the same time, these countries are top contributors to the US's $1 trillion trade deficit. All three countries have vowed to retaliate to the tariffs. Both Canada and Mexico said they were preparing similar tariffs on the US. In fact, Canada has gone ahead and imposed 25% tariffs and taken off American liquor from their shelves. Canadian Prime Minister Justin Trudeau has said that now there should be only made in Canada goods that are bought by Canadians. China has said it would take necessary countermeasures to defend its legitimate rights and interests, has promised to raise the issue at the WTO. Now, the implementation of tariffs and the subsequent retaliation could mark the start of a new era of global trade wars in an already volatile geopolitical situation. The impact is already being felt. Like we said, there have been impact on all asset classes. As for India, despite repeatedly criticizing India's tariff structure and calling India tariff king, tariff abuser, Trump's latest round does not mention India. And of course, big part of it is because in our recently concluded union budget, there have been tariff reductions from India's side on some goods imported from the United States. You will remember we said on this program that this is something we are reporting will happen, and this has been confirmed in the union budget as well. But meanwhile, the question now becomes, is there an opportunity for Indian exports? With Trump tariffs, Indian exports could become more competitive in the global market. According to an analysis by Oxford Economics, India was the fourth largest beneficiary of trade diversions that occurred between 2017 and 2023 after Trump launched a tariff war with China in his first term. Which is why the big question today is, how will the tariff wars play out for India? To speak on this, I'm joined today by Gautam Chacharya. He's MD and Head Global Markets at UBS. Prachi Mishra, Director and Head, ISAC Center for Public Policy, Ashoka University, is joining us. She's also an economist, former economist with the IMF. Ashok Malik, partner of the Asia Group and chair of the India practice at the Asia Group, is with us on the show today, as is Brahma Chelani, strategic affairs expert. Welcome to all of you, and thank you so much for speaking with us on The Big Question. Gautam, let me start with you and your take. And just before we get to the impact on India, let's set the stage of how far these tariff wars can go.
Yeah. I think we have other experts to talk about how far the tariff wars can go, because it's also geopolitics. But purely from a market's perspective, there are two clear things to watch out for. One, any uncertainty, because we don't know how far the tariff wars will go. Any uncertainty is never good for markets. So that's the first comment. Second part is what our economists globally are analyzing and mentioning post the first set of tariffs is that this is a bigger growth shock than necessarily inflation shock for the relevant economies. And that's where the risk is more for India. Now, India, we all know, is less affected by what happens in terms of global trade compared to other emerging markets. But India does get impacted through two indirect but meaningful channels. One is what happens to global growth. If global growth or US growth slows down, it does impact India's exporters or even India's economy indirectly. And second is through the currency. If US dollar keeps strengthening, it will show up in local currency levels also.
Okay, so obviously tariff wars are not good for the world. The fear is that the global economy will slow down. To what extent? Let me come to Prachi Mishra on this. In terms of impact, because if you see it from Trump's point of view, he's saying these countries have to stop doing what they're doing, and he wants to close the trade deficit with them as far as America is concerned. There's $1.6 trillion of trade between America and these three nations. Do you think that these nations will buckle to some of these demands? This is also a negotiating tactic.
Thank you, Tamanna. Pleasure to be back. Let me start by, setting some facts right. I think you already described what has happened, but I think three things I think we should keep in mind. Number one is that energy trumps everything. So, as you mentioned, Canadian oil and energy products have been excluded. Second, I have to say that fear of inflation trumps everything too. So if you look at China, the basic baseline expectations were around a 20 percentage point additional tariffs on China, baseline, but the risks for additional tariffs, on some industrial products going to as much as 60 percentage points. This is not materialized. And one potential reason could be that, tariffs on China, especially on consumer goods, would have much larger effects on inflation. So one of Trump's bold strategies was to argue that the previous administration let inflation go out of control, and this administration will not do the same. And third, I think this time is really different, and I think you pointed this out, that during the last administration, there was only threats to Mexico and Canada for 25% tariffs, but those never materialized. And this time, this is really a reality. But I think what remains to be seen is how long-lasting these are, because that's what is important for the behavioral response. And if you want to look at really the implications for the global economy, to look very systematically at what the implications for the United States are going to be, what the implications are going to be for countries like Mexico, Canada, China, which have already been, have had, facing tariff increases, and the rest of the world. And, there are lots of different mechanisms through which each of these components will get affected, and we have to keep that in mind. I'm happy to, talk in more detail about any of these. Let me stop here.
Okay, let me come to another part of it, about how seriously these are taken, and I'll start that with Ashok Malik, and let me contextualize that question and why I'm asking it, because some of these tariffs are going to get implemented in true rigor from the 4th of February. It's also coming at a time when there are certain things that the Trump administration is asking for. Pressure now building on Justin Trudeau to come to the negotiating table, the Mexican head of state saying that she will as well. Ashok Malik, how seriously should we take these threats? In the sense, yes, they have been implemented or they have been announced. Will they really go through with it?
I think these are serious moves and serious threats. And yes, you're quite right. He is pushing for some sort of a deal and negotiation with America's premier trading allies, who he feels have got market access without giving much in return. Having said that, I do see a protectionist streak in America persisting even beyond any negotiation or any deal. And do remember, trade negotiations, even at the best of times, are difficult to achieve. And certainly not overnight. So am I hopeful of some sort of a grand trade deal before 4th February? That would be nice, but I don't think timelines are that contracted. The impact on Canada and Mexico is significant. Both those countries depend enormously on the US market. Something like 20% of Canada's GDP and 20% of Mexico's GDP is essentially exports to America. And you've already seen a run on the Canadian dollar. Both those countries will be enormously affected. And the calculations within the US would suggest that the inflation impact on the US economy is very manageable. It will lift inflation to about 3%, which for the moment seems manageable. So Trump is obviously negotiating hard and saying, give me a deal I can work with. I don't think the deal will come in a matter of weeks. It'll come in a matter of months, perhaps. More important, I don't see any let-up because he's promised significant tariffs on Europe, especially Germany, countries like Germany, which have trade surpluses with the US. He's promised that in 6 to 8 weeks. And then there's a universal tariff coming in April. So I think this will play out till early summer at least.
Yeah, no, maybe it's just getting started. You have proposed tariffs on the European Union. They have some strictures in South Africa as well. So, and then the universal tariff program. But Brahma Chilani, I'm wondering if you agree with that. And the context here is, look at what happened with Colombia and that whole negotiation there. if the ask is to go slow on immigration from, say, Canada and the concerns around the push of fentanyl, etc., do you think that the two sides could come to the table and this could be averted as a full-blown tariff war?
Fentanyl and illegal migrants are only excuses. What Trump is seeking to do is to close all the bilateral trade deficits that the US has with different countries in the world. He views tariffs as a game-changing instrument to help fill America's coffers and bring manufacturing back to the US. It is not a coincidence that the three countries that he has targeted are the ones to whom American manufacturing has been principally outsourced. And he's doing what he vowed in his inaugural address. He said in his inaugural address that we will tariff and tax foreign countries to enrich our citizens. He is going to shake up the global trading system. We should have no doubts about that. And I think the most significant of his tariff actions has been in relation to China.
Yeah.
If you recall what happened in the tariff war when Trump was in office in his first term, those tariffs were not lifted. In fact, they were not even lifted by Biden. They remain in place. What he has done now in his second term is to fire a warning shot against Beijing's bow by imposing an additional 10% tariff. This places Xi Jinping's regime in a predicament. Any retaliatory Chinese measures would likely invite further rounds of American tariffs, resulting in Beijing running out of US exports to target. This is exactly what happened in the first Trump administration when tariffs were initially slapped on China in 2018. But for Xi Jinping, doing little against Trump's latest punitive action would make Xi Jinping look weak at home. And also add to the fact that China's economic growth engine is sputtering. It cannot afford to get into a widening trade war with the US because this will likely have an international spillover. In sum, this will seriously harm China's interests. And this opening salvo against China that Trump has fired is just the opening salvo. More is to come. But make no mistake, those 10% new US tariffs on China will not be lifted. The 25% tariffs on Canada and Mexico are negotiable, but not the 10% US tariffs on China.
So a Wall Street Journal report today says that China has now presented or is preparing its first bid for negotiations, including allowing more US exports into their country, including taking TikTok off the table, in the sense looking at TikTok as a purely commercial deal. So perhaps more negotiations coming there as well, Brahmachalani?
Well, look at China's reaction. It vowed countermeasures, and the only countermeasure it has announced is taking the matter to the WTO. The WTO is now a toothless organization. There is no way that the WTO can address China's concerns over the latest punitive action of Trump. So it goes to show how limited the leverage that China has to deal with Trump's actions. And it actually is bracing for more punitive actions coming from Washington. So it's fearful that that this is just the opening round of action against Beijing and that more will come. And I think this will clearly shake up the US-China relationship because, as you know, that China now increasingly depends on its exports to sustain its slowing economy. Exports have become the only sector that still thrives in China. And last year's figures show that China's trade reached almost trade reached nearly $1 trillion.
Right.
And so this heavy reliance on exports is going to erode because of Trump's strategy, not only to impose punitive action on Beijing, but to make it a wider tariff war, which will also co-opt America's allies and partners.
Okay, that this sets me up beautifully for what is the core question today. And while we know tariff wars across the world means less trade between countries, more inflation in various pockets depending on which country produces what, it's just changing what the global world order is. The question is, what does it mean for India? And I know we're looking at it myopically because in the global picture, all right, not the biggest part of the pie, but from our context, maybe the most important. I'm going to come to Gautam first on this question.
So look, for India, from a markets and economic perspective, any slowdown in global growth has an impact. Okay, we can always argue India is less sensitive to global trade, but it is sensitive. Any slowdown in global growth will hurt India's growth numbers. In terms of the markets, again, any uncertainty globally or any uncertainty non-US markets will hurt India, like we've seen in the last few months, where EM as an asset class has suffered. And along with that, we have seen foreigners selling India also. And third part is what it means for markets in terms of broader sectors and all. Again, there are sectors which should be less affected, and there are sectors which will be more affected. IT services should actually be least affected, also helped by currency, while the local consumption, etc., should be broadly okay and not much adversely affected.
Okay. Ms. Mishra, how do you look at the impact from an Indian perspective?
Tamanna, before I come back to the Indian perspective, let me quickly say that, a couple of things when we are looking at the impact, for example, on the United States. Remember that tariffs are not in isolation. There is also expectation of big corporate tax cuts, deregulation more generally, which could boost US growth. Some of these may take time to play out, while some of the effects of tariffs on consumption and investment may be more immediate. This is important to keep in mind, but also if you look at tariff recipient countries, say China, I mean, Brahmachalani already spoke about Chinese exports, how they would be affected and they would be pushed back due to higher tariffs. However, as you pointed out, China would retaliate, is already planning to retaliate, and therefore, the impact on China's net exports and its drag to growth may not be, that much in the end. And, I think remember that if Chinese growth is expected to decline significantly due to the tariffs, China has macroeconomic tools which it can use even preemptively. It can use fiscal, it can use monetary, as well as FX policies. So I think in the end, my baseline view would be not that much of an overall effect on growth or inflation in China. Of course, I wouldn't rule out risk scenarios. If you come back to India, I think, one phenomenon which we are already seeing. So as US pushes Chinese goods back, China is going to dump it on the rest of the world. We're already seeing some of it. And that is going to reduce India's competitiveness in third markets too. And we have to think about, international legal systems. As I think Brahmachalani correctly, pointed out, US has withdrawn from the WHO already. And if it really withdraws from the WTO, there's going to be huge, global implications for generally multilateral rules-based frameworks. And remember that China uses FX as a tool, then it could also have third market effects on competitor countries like India, Sri Lanka, and Bangladesh. But at the same time, there's a big silver lining. Excess supply of Chinese goods outside the United States could reduce global prices and lead to lower inflation in the rest of the world, including in India. And of course, I think at the margin, I think the question which you are hinting at is there could also be a big opportunity for India if some of the space vacated by these countries who are directly targeted can be captured by us. Let me stop you.
Yeah, no, actually, I'm not even hinting at it. I'm saying it up front and center because only from the point of view, and I'll come to Brahmachalani on that, we have the experience of how to negotiate with Trump. It's always a negotiation. It's a give and take. Are we relatively better placed to figure out that negotiation and come out on top?
Well, let's look at what happened during Trump's first term. He exerted pressure on India, quietly, not publicly, to boost imports of American oil and petroleum products in order to reduce its trade surplus with the US. And then if you look at the US government figures, suddenly there was a spike in Indian imports of American oil and petroleum products. 2019, 2020, 2021, and 2022. For 4 years, there was a huge spike in Indian imports of American oil and petroleum products until the Russian invasion of Ukraine opened up cheaper Russian oil for India. So again, this time, Trump has made clear that he wants India to do two things: boost its imports of American oil and petroleum products, and to buy more American weapons. India's growing trade surplus with the US clearly puts it in the crosshairs of Trump's tariff strategy. Many countries run trade deficits with China that are partly or wholly offset by running trade surpluses with the US. So does India. Under Prime Minister Modi, India has been running a huge trade deficit with China. That is partly offset by running a trade surplus with the US. But with Trump intent on closing all of America's bilateral trade deficits, India might finally resort to raising tariffs on imports from China. Now, this avalanche of imports from China are undermining India's manufacturing capabilities. They are, in fact, by 2021, 2022 financial year, our trade deficit, China's trade surplus with India was higher than India's total defense spending. In other words,
so in China, it's inflationary. It's inflationary for ordinary Indians. Because as of now, we are importing a lot from China. So tariffs are inflationary at the end of the day.
Well, if you only focus on inflation and not on economic strength, yes. But should India be underwriting China's economic and geopolitical power?
Okay.
So maybe Trump's threat may force India to face up to the hard truth on the widening trade deficit with China. Okay. Because it's one thing to import essential items, essential goods from China. It's another thing to allow your economy to be swamped with non-essential imports from China.
I'm going to get Ashok Malik's view on this. What's the impact going to be like for India in your view, Mr. Malik?
Look, if you look at any of these countries, Mexico, Canada, India, perhaps the EU at some point, either Trump imports tariffs and then the other country imports tariffs and then you negotiate, or if you can get away without him imposing tariffs and you don't impose tariffs in return and then you negotiate. A negotiation is coming. A hard negotiation is coming. It's coming for all of us. It's coming for Canada. It's coming for Germany. It's coming for India. It's coming for all of us. In this context, I think the budget sent very good signals. The tariff concessions in the budget are not the end of the story, but they're a signal. Minister Jaishankar's visit to the US, Trump's statements on India, where he's spoken about India being India's tariffs being a concern for him, but he's not been hostile or negative beyond a certain point. So there is space for negotiation here, and certainly Prime Minister Modi's planned visit to the US in February has come not a day too soon, because it's an early visit. There will be a desire to make it a constructive visit on both sides, and while we may not see an immediate deal, we will see some signaling towards some sort of a deal. And in specific areas like defense manufacture platforms and equipment, we are buying from the US. We can buy more from the US. The problem really is our defense budget. It's not the value we see in some US platforms. In terms of energy, US gas and US oil, we can buy from the US, but the US has to begin production. Right now, it's not producing enormous quantities. Trump has to crank up those machines, and then we can buy. And of course, there is a lot of scope for energy cooperation. There's scope for cooperation in certain commodities, including certain types of agricultural commodities. So there is space. Both sides recognize there is space.
So, it's going to be tricky negotiations, a tightrope walk for India and the rest of the world over the next few months, really, till the dust settles on how exactly this tariff war is panning out. So it's going to be wait and watch. As of now, any nation that has its fundamentals in place, its macros in order, will be best positioned to withstand the storm. And that, of course, includes India. Thank you so much to all of you for joining us on this edition of The Big Question. Tell us what you think of the show and your thoughts on the topic. We're keen to hear from you. Tell us what you'd like to see on the show, and we're happy to cover it for you. See you again, same time, same place.